In my previous weekend review, I had mentioned that ADX had moved well above the 60 mark and may have peaked out. Whenever such thing happens, a trading market with volatile move follows. Hello and welcome to the weekend review of week beginning 19th of October 2020. For disclaimer, please refer to chartvideo.com/disclaimer. Keeping it simple, going by Dow theory, the intermediate term trend is still up. It has not yet given any major reversal signals. Should it make any lower high, lower low from here, in that case we would be saying that intermediate uptrend is over. Well, will it happen or not? We will try to analyze in this particular review. Just going by the candlesticks, on Thursday we had a huge sell-off in Nifty. It had gone to as low as 11,680. Right now it is trading below the 11,800 mark and a major bearish engulfing pattern has been formed. The highs of 12,022 was tested twice in course of the week. As far as support resistance goes, the 12,022.25 level would be considered as a major resistance, but before that we need to see whether the high of 11,800 is crossed in coming week or not. On the lower side, obviously, the platform or the swing which we see here at around 11,600 to 11,620 is likely to act as a support. Previous week, rather after the trading of 9th of October, I had mentioned that the Nifty is right now placed too much away from the short-term averages. Either the moving averages will move up or Nifty may come down to retest these levels. It has tested the 13-day SMA and yet to test the 30 or the 50. At this place, I would like to be neutral and watch out whether Nifty breaks the 13 SMA or not and then moves downward or closes above the 5 SMA to bring a short-term upthrust to the market. For me, the 5 SMA and the 13 SMA both would be quite crucial in the next week. Well, we had discussed about indicator was making a negative divergence, but at the same time, let me be honest, I had told you right now indicator is exhibiting negative divergence, but we should not panic right away. The indicator is still to fall below the equilibrium line. Yes, the divergences are there. Whether the divergences result in a little more trading type of a market and thereafter it moves up again is to be seen. Well, let's see if we can get that or not. In the ADX trio, if I take out the ADX line and check it, we are having a listless type of movement in the ADX on daily charts. This is indicating that perhaps a trading market of sort may continue in coming days. Well, as of now, the PDI is greater than the MDI and both are more or less above 20. Let's see which way it breaks out in the coming days. Continuing with the ADX discussion, in the previous week, I had told you of a possibility of the ADX topping out in Nifty hourly chart. That did happen, and right now it is placed at 28 odd levels as per this data. Well, some trending market signal is yet to be obtained in ADX daily chart. One thing is to be noted, whenever ADX of any particular periodicity falls down, it seldom gives any strong signal for the next part of the trend. In that time, it would be advisable for you to reduce the periodicity of this particular chart and then check which way any indication is coming. Let's do it. We will be gradually reducing the periodicity of Nifty, and right now we are checking Nifty futures chart on a 30-minute time scale. In this case, the ADX was moving upside along with the MDI, which indicated downside movement may take place, which did so on Thursday with a massive fall. The 15-minute time frame of Nifty ADX moved upward along with PDI, indicating downside on Thursday. Now the ADX in 15-minute chart is also swooping down, indicating trading market. What is the 5-minute saying? It has virtually flattened itself out on Friday. Right now is placed as low as 11. Well, it does promise Monday onwards, again perhaps Monday late or whatever bait, another short-term trending market may come up. It would be interesting to see which way it moves. The RSI on 60-minute chart of Nifty 1-month future is more or less tandem with the price. Right now the swings are on a lower side. It had reached the oversold area and right now had moved towards the equilibrium line. Before the indicator moves up again, we may expect a positive divergence to develop. This is generally the case. It does have exception, but generally some sort of a positive divergence develops before moving up the way we had it here. So for that matter, I would expect at least a positive divergence to come over here. Then the next side of the up move may begin. On the weekly charts of Nifty, well, as of now, nothing special to be mentioned about. The trend is up. The weekly 13-week SMA is also on the upside. Right now, it is at 11,400 odd levels. Let's see if this gets violated or not. As of now, it is above the 13-week SMA. The 14-period RSI on weekly scale appears more or less tandem with the price, with a slight sign of divergence at the top. Well, but as I said, divergence does not mean that we will be hitting the top always. It just means it is a debtor to the primary trend. So be it. Let's see. But as of now, the 14-week RSI does not signal that any untoward, unfortunate incident may take place right away. Going to the derivative segment, well, input call ratio, I had always said if market moves up, normally the PCR increases. If market moves down, normally the PCR decreases. If it doesn't happen, a strong move generally follows within a short time of 1 or 2 days. Well, on Friday, the market went up, the PCR fell. So again, there is a signal that most likely a strong move in next 1 or 2 day time frame may come up. In my weekend review, we had always stressed the need of learning, and here is a small clip which might benefit you. Open interest is usually used as an indication of the strength of price movement, but on its own, it does not provide any indication of the direction of price movement. Increasing open interest shows that there is strength behind the current price movement, and decreasing open interest shows that there is weakening of current price movement. For example, increasing open interest along with increasing prices indicates that the upward price movement could continue, but decreasing open interest along with increasing price indicates that the upward price movement may be about to reverse. Open interest is also used to determine if a market is likely to be trending or range bound, that is, choppy. Increasing open interest shows that the rate of new trades is increasing, which indicates that the market is being actively traded. While decreasing open interest shows that the rate of new trade is decreasing, which indicates that the market may be entering a time of less active trading. In an effort to encourage traders from learning technical analysis from the comfort of your home at your pace and at an economic price, here's a website chartvideo.com. Support resistance video contains discussion on necessary price action, trends, supports and resistances along with interpretation of open interest in futures. Moving average video covers all characteristics of moving average, slope, deviation, confluence and effects of major and minor moving averages on price. It has an exclusive trading strategy for intraday traders. Power ADX is a unique tutorial video where aspect of trading market and trending market has been discussed along with little known but all important ADX characteristics. It winds up with an intraday trading strategy which can be extended to short-term and positional trading. RSI Vantage, a new addition in the course, covers comprehensively all aspects of RSI to look at the market from Vantage point of view. 4 trading strategies have been discussed, out of which one is an intraday trading strategy. This tutorial video is a must across all time frames. Log in and enroll yourself to sharpen your skills with the most powerful trading rules. Welcome back. The previous upside move was with increase in open interest. Thereafter, in recent days, we are having a flat to downward movement in which open interest is reducing. This clearly indicates the trend which we are in is a short term of nature and lower levels will bring in buying. Get ready for lower levels. Going by the support and resistances, I would be targeting the level of 11,600 to 11,620 where I can get a short term bounce. On the upper side, I won't be chasing till the open interest starts building up again. So much so for now. The festive season has begun. Please enjoy yourself, but at the same time, maintain social distance, sanitize your hands, and wear a mask. Avoid crowded places, avoid closed places. Enjoy yourself, but enjoy responsibly. See you again next week, same time.